We were talking sports, but we should pivot our focus. Welcome back to President-elect Trump promising tax cuts right here on CNBC this morning. But would that put Muni bonds' tax-exempt status at risk as the administration's got to find revenue to offset the potential costs, reduce their debt? My next guest says there's no need to worry quite yet. It's all speculation, and Munis still offer a good risk-reward balance. Joining me is Craig Brandon. He's co-head of municipal investments at Morgan Stanley Investment Management. It's great to have you back.
Hi, thanks. Nice to be back.
So, by the way, the Muni market was making some headlines already this week with, tell me, what's the supply-demand dynamic like?
Yeah,
right now?
so supply-demand has been very balanced all year long. A lot of supply, a lot of new issuance, but also a lot of demand, a lot of money being put to work. So it's been balanced. What you saw yesterday was a very large day of bonds out for bids, and everyone's wondering, what does that mean?
Yeah,
does that mean weakness in the market? I think the way we look at it is there was a huge amount of issuance the last couple of weeks. And if you're looking for relative value trades, you need to sell bonds on the other side of the bonds you're buying. And it's the end of the year, and a lot of the big broker dealers, a lot of the big banks, they don't really want to stock bonds. They don't want to take a lot of risk with 2 weeks left in the year. So you're not seeing as much buying from the broker dealers. And if you bought bonds the last couple of weeks in order to sell bonds, you put them out for the bid, right? So significantly less percentage of that bid list is traded yesterday. But we don't really think it's a big deal. We think it's more of a market timing thing.
Well, I always think it through, appreciate the explanation once you understand maybe why it's happening to say, okay, well, for, let's say, a retail investor or someone like that, does this create an opportunity? Someone who might be looking at the asset class and thinking, to our last discussion, stocks feel a little nerve-wracking right now, and is there somewhere else where you can pick up a decent yield, which raises, again, this question about whether there's any concern on the tax-exempt front.
Right. So the one thing I would say is that we're getting $32 billion on January 1st of coupon reinvestment, which is also a very big number. So we're expecting early January for, things to tighten up a little bit and for things to rally once that money hits the market. So this could be a very short-term buying opportunity now if you see, bid lists out there. Turning to the tax exemption, there are so many logistics that would have to happen to get this done. I think the first thing is that, we have a $4 trillion market, over 1 million CUSIPs outstanding. It's about a $40 billion give up by the federal government.
40 billion?
About 40 billion.
You think that's it?
That's all it is, right?
$40 billion.
That's the give up of the income that they give up for not taxing municipal dividends.
That doesn't seem like very much at all.
It's not. So it's only 2% of the $2 trillion deficit. And what you also have to assume is that I'm not sure you can tax bonds that are currently outstanding. You could only do it for bonds going forward, we think. So if you can only tax the income on bonds going forward, it doesn't get you anything towards your budget savings. So in theory, yeah, there's $40 billion on the table maybe you can do, but I just think logistically and legally it might be very difficult. Plus, don't forget, most members of Congress started off in local government, right? We're all taxpayers. We're all paying the same taxes. If I have to pay, higher taxes to the federal government or lower taxes to the federal government, you're paying state and locals, right? So whether you're going to raise financing costs at the local level by 100 basis points, so that's going to show up in your local taxes. So your local taxes are higher, your federal taxes might be lower. As taxpayers, we're all paying the same taxes.
Totally.
Right? So you're sort of rearranging chairs on that one. So there's a lot that needs to get done.
And I could see the administration saying, we want to rearrange the chairs and go get mad at your local indebted. But I've not really heard anything meaningfully in that direction.
Correct.
That leaves us then with kind of just the tactical recommendations. What are they? I mean, if you were to say to people, hey, look at what you can get on, what is it? What's interesting to you right now?
Yeah, so, high yield has been, very, very technically driven, super huge demand for high yield, one of the best performing asset classes in fixed income. That's still interesting, although, that isn't going to last forever. I like high quality. You're earning 4% coupons in the 420, 425 range. For a New York City resident buying a 425 bond in New York State, that's 8.5 or 9% after tax. So it's really, really compelling. I like high quality, 4% coupon, AA, AAA bonds, and you mix in some high yield to try and ride that wave.
Makes sense. Speaking of high quality, good luck to your Bills this weekend.
Go Bills.
That's going to be quite a Bills, Detroit. I mean, it could be a Super Bowl preview.
Super Bowl
Look
preview.
At their
Super Bowl
records.
preview.
We should do a Muni segment on that. Find it, take. Craig, thank you. As always, really appreciate it.
Thank you.
Craig Brandon with Morgan Stanley. Before we go, want to mention Apple moving higher again today. The shares still haven't topped yesterday's all-time high of $250.80, though. now. The stock's riding a 9-day streak of record intraday highs, matching its longest stretch in history, and its market cap is approaching $4 trillion. We're at 3 3/4 right now. We'll keep an eye on it, of course. Tyler is getting ready for Power Lunch, and I'll join him on the other side of this break. Stay with us.
Muni Money is sponsored by BAM. Help build America's future with BAM-insured Muni bonds.
Infrastructure makes our economy grow and keeps our communities strong. And now's the time to build. BAM Mutual protects municipal bond investments that finance essential projects, providing an added layer of security to improve your portfolio with guaranteed income that helps investors reach their goals. Invest with confidence. Build a better portfolio with BAM-insured bonds.